how to trade the CCI oscillator on the hourly chart like a pro. How to trade the CCI oscillator on the hourly chart like a pro. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW24 traders. For CCI trading, our website is www.dayprotraders.com. The title of the video is how to trade a CCI oscillator on the hourly chart like a pro. Alright? So in this tutorial, I want to share with traders CCI trading tips, effective day trading and swing trading tips, that they can use on the hourly chart, specifically on the hourly chart, to maximize their profit, whether in the forex market, in the future market, or in the stock market, The trading setup that we are looking for is the CCI going above the level of 200. Here it is. When the CCI goes above the level of 200, it's indicating to us that a bullish momentum is pending, it's about to begin, or the bullish momentum is very, very strong. We will wait for the price to confirm, the bullish, progression, by displaying higher lows, higher high, by breaking resistances on the left-hand side, by displaying, bullish chart patterns. So here we are, we are on the hourly chart. This is one of the CCI trading mistakes. Very often when traders see the CCI goes above the level of 200, they want to sell instead. They want to sell. But it's a contra-trend, It's a contra-trend when you see it goes above 200. If the price was consolidating, well, that will be true, But if the price is in a rising channel, and one wants to sell, it's a contra-trend. Yes or no? It's a violation of a market pattern. When one is selling in a rising channel, one needs to be careful unless the price is at a target price level or the price is at a conversion point. That's the only time that we sell in a rising channel. So TSTW24 traders know, the price must, if the price in a rising channel, it must display higher lows, higher high, until it fails to display a new higher high, which means it may form a double top, or may form a head and shoulder chart pattern, confirming to us a weakness of that bullish progression. The opposite is also true in a downtrend. We don't want to buy, when the price is in a declining channel. It's a violation of the market pattern, If we are buying in a rising channel, either we are at a conversion point, or the price at target price level, or the price form an inverted head and shoulder chart pattern, or we see a round bottom, or a double bottom chart pattern, or a triple bottom chart pattern, then we will use what? Carefully, a top-down trading method to trade it, because it's a contra-trend. So here it is, the CCI period 14 goes above the level of 200. The first thing coming to traders' mind is truly overbought. They want to sell and forget. But this is a temporary sell because it's a contra-trend, so price, you see here, where the price, the candlestick bar is this one here. I'm zooming to it so you can see clearly what I'm talking about here. So this candle here, that's where the CCI went above the level of 200. So trader would like to sell, but you can see that candle where my cursor is, the price went up more before coming down. Probably if the trader is day trading, he or she will be taken out before the price will come down. It's a contra-trend because what the trader is doing here, he or she is violating the market pattern. Are we at a conversion point? So here it is, here it was. I would prefer to sell here. Resistance, there are resistance here. So I would prefer to sell somewhere in this zone instead of here. But now, there's a reason also here, because this was a key level. You see here, price changing direction here. If I want to sell here, I would prefer it, break below. Now, break below, retest, and turn around. Because it's a key level, it's a support level here. So, we want it to break below, Here here, this place is better. You see here, it did below that key level and retest here. Okay, this will make more sense. Okay, so we say break below a key level. Okay, make more sense. But here it's a extreme condition indicating to us that a bullish momentum is about to begin. So we will draw the warning line on the hourly chart. I'm going to color my warning line, my warning line into orange once again, because that's the point where the CCI crosses above the level of 200 on the hourly chart. Okay, what are we looking for? Bullish chart pattern. Price forming a higher low after a higher high. There's one here above the warning line. So there was this higher high in comparison to this high on the hourly chart, and then the price form. Okay, I prefer this low here. Why? I don't prefer this one. I don't prefer this very much because we have a channel. This is near the median line, which is not too bad, but on the edge of the trend line. See here, the channel on the edge. Here we are a little bit in the middle, which is also not too bad, but we need to be a little bit careful. Okay, here it is. So it breaks above the previous high here, and then retest it here. But the smart money one is here. Okay, on the edge, we will prefer it on the hourly chart. We want to be on the edge of the channel. Okay, then from the hourly chart, okay, we go to the 10-minute time frame to zoom into it to look for the signal, and then we can go to the 3-minute time frame to enter the trade. All right, boom, it went up a bit. Okay, it went up a bit, but here, because we're on the hourly chart, we need to be a little bit curious. We can go to the daily chart to see the bigger picture. So we are not making our decision alone on the hourly chart. So the hourly chart, we are looking for trading setup, but we need to be a little bit curious and go to the daily chart to see the bigger picture, which means we want to validate our trading setup that we have seen on the hourly chart. Okay, so our warning line is there. So we see the first high low. Look what the price did. The price went up a bit. Okay, it went up a bit, but display almost equal high here, indicating to us almost. It went just a bit above the previous high here. All right, and then just came back down, and where it stopped on our warning line. So game on, it's still above our warning line. This time, here it is, we draw without violating the market pattern. Price went down, or we can do like this, completely like this, or like this. Okay, price went down, and then break above the trend line and retest it here near the trend line. Another bullish trading setup on the hourly chart. And from there, look what the price did. Boom, 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 and even gap up. Now, if the price gap up like this, you need to go to the higher time frame to see where is the price now. Why the price gapping up? There are different reasons why the price will gap up. Is it gapping? It is an exhaustion gap? Is it a continuation gap? Is it a breakaway gap? Right? So whenever it gap up like this, check out the higher time frame and find out why the price gap up. And then finally gap up. So this information given to us by the CCI here that a bullish momentum is about to begin urgently and is likely to be strong is now confirmed here with the price gapping up, running fast and gapping up. But you can see that information was given to us by the CCI period 14 on the hourly chart here. All right. There was a first setup here, but the price quickly pulled back to retest our warning line. Can you imagine? That warning line is powerful, isn't it? Okay. Now again, we have another scenario. Now again, it's above the 200. You see here, this is extreme CCI. Is this, okay, a bullish? Okay. Is this one bullish or bearish? So if the price fell, so now what do we need to do? We are on the hourly chart. We draw the warning line. Which candle? This one, on the high of that candle. If the price fell to go above that level and start displaying lower lows, lower high, we will sell instead. It's the opposite signal. So when we see like this, we go to the daily chart to validate the trading setup. Where are we? Where are we going? So on the daily chart, there's a resistance here. That's where the price went to, this resistance here for this stock. The stock we are looking at is Adobe System Incorporation on the daily chart. Okay. All right, we can combine the daily chart and the hourly chart. So when we are looking for trading setup, extreme CCI trading setup on the hourly chart, we must be curious a little bit and go to the daily chart and know where are the key levels. So the resistance here. I will go a little bit further, go to the weekly chart, even a monthly chart. Yeah, there's a resistance here. That resistance is here. There's a resistance here. Price gap up into the resistance zone. So as long as it stays below the resistance, we will give priority to bearish signal. Though on the hourly chart, we have an extreme CCI trading setup because the CCI goes above the level of positive 200. On the monthly chart, again, the same key level is in place. Looking back, we will see clearly that this stock Adobe System Incorporation, EPIC ADBE, Alpha Delta Bravo Echo, NAXA 100 stock was trending for some time. Now it's reaching a critical level, okay, in the zone of 9400. So the information that we have received now on the hourly chart is not very bullish because the price is not yet above, okay, that warning line, the new warning line that I'm drawing now. Okay, it makes sense. I will be recording more video to clarify this trading strategy to traders about how to trade a CCI oscillator on the hourly chart like a pro. In this case, we are concentrating on the extreme CCI oscillator trading setup that often occur above the level of positive 200 or negative 200. In the next video, I'll be talking about how to trade the CCI indicator on the daily chart. This time we will be focusing on the, a bearish trading signal. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to trade the CCI oscillator on the hourly chart like a pro. Speak to you soon.